This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
This session goes through now and addresses the current issues part of the syllabus. Although we've left it right until the very end, that doesn't mean to say that it is unimportant. It is vitally important, as usually it is one of the easier questions of the optional questions within the exam. You may hear different elsewhere, but personally, I believe that you should be able to tackle any current issues question, no matter what the subject content actually is. So just to remind you, the current issues is covered in question 4. It is there for 25 marks and it is there for 45 minutes. I would recommend that you always attempt the current issues question because of those other two optional questions. You usually tend to find that one of those is particularly difficult. So therefore attempt the easier one of the accounting standards questions, whether that's 2 or 3, and then also the current issues question. So let's go through and have a look at what we are expected to get from this session. So first of all, we want to go through and understand why we develop new accounting standards, because that's what current issues is all about, isn't it? There is an issue with the standard. We need to look at what the issue is and why we develop an accounting standard. So if we know why we develop an accounting standard, that should then help us understand the issues. And to do that, we need to understand the process of developing a new IFRS. So we need to look at why we develop a new IFRS and then how it is then developed. Once we've gone through and done that, then we're going to put a little bit of exam focus upon it and how to answer any exam question based on current issues revolving around accounting standards. And every question at P2 so far to date has revolved around some form of accounting standard or accounting principles. So let's go through first of all and look at the reasons for developing a new accounting standard, of which there are 3. Okay, the first one there is that the current accounting standard is inappropriate in the current business climate. So still fairly topical, because you've got there the impairment of financial assets, which previously was in IAS 39 and has now been updated, as we've seen, and is now included within IFRS 9. I think we may have mentioned this previously. It was a long time ago that we looked at financial assets, wasn't it? But what happens there is that the original standard used the incurred loss model. So there had to be objective evidence of an impairment in order for us to write off the value of that receivable. Now, the problem there is once there was objective evidence was usually by the time it was too late, and therefore we were never going to go through there and get any cash in. And that was usually in the times of economic difficulty. And when there's economic difficulty, our results suffer. And as our results suffer, we then take a further hit because there's a massive impairment with regards to the value of our financial assets. And that wasn't thought to be too prudent. Okay, we should be anticipating those losses. So what we've got now, as we've seen, is in the updated standard, there is an expected loss model, isn't it? So trying to anticipate those losses and work out what they are and record them over the lifetime of the debt. So the first reason why we develop a new standard is because it's a little bit out of date with regards to the business climate. Things are changing, businesses are changing, and the accounting standards need to adapt for the way that businesses do develop. You think about the internet and technology, that's had a big impact as well with regards to accounting for some specific technical transactions. The second scenario why development of new standards occurs is that we go back to the framework. The framework underpins everything, doesn't it? Right back, I think it was to the first or second lecture, wasn't it? Wow, that was extremely long time ago, wasn't it? But what you've got there is that the framework provides the fundamental principles, doesn't it, for setting up the accounting standard. And the issue that you've got there is that as the framework evolves over time, then the standard may not then meet those definitions contained within the framework. So if we go back to the definitions, we're thinking about assets and liabilities. So an asset is a resource controlled by an entity, isn't it, as a result of a past event that gives an inflow of economic benefits. A liability, your present obligation as a result of a past event that gives you an outflow of economic benefits. Income, essentially there is any increase in assets or reductions in liabilities. Expenses are reductions in assets and increases in liabilities, aren't they? Equity, remember we queried that very early on. It's just a residual interest in the assets of the business after deducting the liabilities. There's no mention of ownership, is there? And then what you have there is recognition. So the recognition principles is going through there, and a probable inflow or outflow of economic benefits. The key word is probable, and that you can then measure that reliably, isn't it? And then what we've also got is those various different measurement criteria with regards to there. Is it current cost, fair value, historic cost, present value measurement? Okay. Whew. So what we've had there is issues that have arisen because the standard is not consistent. It has led us to the development of IFRS 13, remember, which is there your fair value. So we always queried that, didn't we, as we went through the videos, that everything talks about fair value this, fair value that, fair value everything in terms of an international perspective. We didn't have a standard. How crazy is that? Okay, it only took us a few years ago that we were able to bring in a new standard that went through there and looked at fair value and gave us those three methods, looking at step 1, step 2 and step 3, okay, or level 1, 2 and level 3, wasn't it? Okay. Consolidated financial statements, that's a good one there with regards to IFRS 10 and defining in more detail control. Okay, so going back to the definitions of your assets and looking at your liabilities and starting to talk there about your obligations. The key bit there about IFRS 10 is control, and control now is the power to, you can't remember, you can, yeah, power to direct the activities, isn't it? Yeah, it's a long time since we looked at groups as well, isn't it? So make sure that you're familiar with that there. Control, in terms of group accounts, is the power to direct the activities, and IFRS 10 goes through there and emphasises the power to direct and therefore control, and therefore we consolidate. So distinguishing it between the power to direct and the power to participate, whereby we only have influence. And also their leases. The new accounting standard, although technically not within the syllabus, still could be their part of a current issue, isn't it? We mentioned, didn't we, about your operating leases, and that on an operating lease we just recognise an expense straight line in profit or loss. Well, where's the asset? Where's the liability? We should really recognise a liability as we have a present obligation. We should recognise an asset as we have control, shouldn't we? So there are, if you like, now updates, changes in IFRS 16. As we said in the leases chapter, the lessor accounting isn't going to change, but the lessee accounting is. So essentially what we start to look at now is anything less than 12 months on a lease. So if you take out a lease for less than 12 months, it just follows the operating lease treatment. And if it is anything greater than 12 months, it follows the finance lease treatment. And then there's also been updates there in terms of what specifically constitutes a lease, thinking about control as opposed to just physical ownership. Okay, so again, going back to the definitions of the asset within the framework. Okay. The third reason why we develop a new standard is looking at consistency with US accounting standards. So bringing together, if you like, this process that you may have heard about called convergence. What's the point of having international financial reporting standards if they are not going to be adopted by one of the biggest global superpowers, being America? They are one of the biggest, if you like, countries in the world with regards to finance, with regards to business. And, if they're not adopting these international standards, then what's the point? Okay. So what you've got there, examples are regards to provisions and financial instruments. And the reason why they've been updated or amended with regards to provisions is the fact that US rules are very much, or US standards are very much rules based, so very factual, because America is a very litigious culture, isn't it? So if there are rules and the user of the accounts can see that those rules have been broken, then you can be sued. However, international standards are developed more based upon principles, aren't they? Using that framework to give you the ideas, to give you the basic understanding, so that you can then take that basic understanding, apply it specifically within a standard, but still allow a little bit of subjectivity and a little bit of judgment to help you deal with, if you like, more complex accounting issues. So what we've gone through and done is there's been a big alignment of IFRSs to ensure that they meet, if you like, the needs of US accounting users as well, without going into a rules-based situation. If you think about IFRS 15 and how that's been adapted from IS 18 and IS 11, there's much more detail. I've got to be careful not to say much more rules. There's much more detail behind the principles to help you make a better judgment and a better estimate. So it's important that we don't say there's more rules, but there is more detail behind the principles as we adopt these newer accounting standards. So the three things that we've got in terms of why we develop our new accounting standard is that it may be unsuitable in the current economic climate. The rules in the standard don't meet the definitions within the framework, and then they're talking about consistency with your US accounting standards. It's important that you remember those three reasons, and we'll see why when we get to looking at the current issues question. The second bit of our process was making sure that we understood the development process and how it all pieces together. It looks quite long. It's ridiculously long, and we shall demonstrate and highlight that in a moment. But what you have there, first of all, is an agenda consultation. So the ISB, the International Accounting Standards Board, have a work plan. You can have a look at it on the internet. Put ISB work plan into an internet search, and it will take you directly there. And that will go through there and look at what currently the ISB are working on. And all the agenda consultation does is it looks to see whether or not they need to add things to the work plan, whether that is to go through there and try and increase convergence on particular accounting standards or to try and improve the quality of some of the accounting standards. Once they've developed the work plan, a consultation group or a working group will be put together who then will put together a discussion paper. Now, a discussion paper is not mandatory, but what it goes through and does there is that it explains the issue, it looks at what they could potentially try and do, and asks for public comment about what people think would be the best way to address that issue. Okay, it's not mandatory. However, they then go on to produce an exposure draft, which is mandatory, and the exposure draft has the details of the specific proposal that the ISB have put together following the discussion paper and following the comments that they have got from various either users of the accounts, preparers of the accounts, academics, whoever it may be. They have to produce that exposure draft and publish it, and that contains the specific proposal. And it's those exposure drafts that tend to get examined within the current issues question. That's not to say it will, but some of the exposure drafts do get examined. I think one of the recent questions on current issues with leases did test the exposure draft on leases. Then what you've got, if no one's happy with the exposure draft, it will then be revised following further public consultation. Once everybody's happy with the revised exposure draft, a new IFRS is issued. Again, people will have their comments upon it. And then once everybody is happy with the IFRS, it is then adopted. Once it is then adopted and everybody uses it, we need then to check that things are running according to plan and that there are not major issues following the implementation, that we still have a fair presentation of the results. So there is a post-implementation review. Now, the key bits that you need to go through and focus upon there are thinking about the work plan. So always go back and check the work plan periodically, because as time passes since I've recorded this video, things will get updated and added to the work plan and removed once they have been completed. So as well as the work plan, there's the exposure draft and the new IFRSs. And as I speak, the most up-to-date, newest IFRSs are IFRS 15 revenue and IFRS 16 leases. If we then go through and think about just bits and pieces, just a bit of a extra, if you like, added value exercise, just thinking about leases. You know, as I sit here, it's 2016, and leases have just been going on forever. If you look at what we have here, it says there, in 2006, the board, so the ISB board, set up a joint lease accounting working group. So the working group, things were added to the work plan there in 2006. It says they met in February 2007, and 2008 commenced on an early draft of the discussion paper. Okay, so it took 2 years nearly to get a discussion paper set up. However, once the discussion paper was set up, hopefully the exposure draft would have come quickly, things would have progressed well, so that there by mid-2011, So approximately 5 years or so they expected to go through there and have a new accounting standard. Okay, was that the case? Simple answer, no. Look at that. 2006 was the project started. Only this year, 2016, is IFRS 16. Hey, IFRS 16 in 2016. Maybe they wanted to wait until the 16s collided and met up with each other. IFRS 16 was issued, so that's 10 years. And then we've still got another 3 years before it's adopted. So I assume that it will come into your P2 syllabus at some point in the future. But as I speak at this moment in time, for the syllabus for, is it the September 16, December 16, March 17 and June 17 exam, IS 17 is the examinable standard as an accounting standard, and leases and IFRS 16 and the exposure draft could be there as a current issue. Okay, but you can see there, wow, yeah, that's a long period of time, isn't it? Similarly, if we go through there and think about the revenue recognition project, again, started at a similar time. Discussion paper took 2 years, exposure draft 2 years. What I like about this is there was a revised exposure draft similar to what we saw several times with the leases. It was then issued in 2014 and was due for adoption next year. But the key bit there is that we've just held back a bit. It's like, whoa, reining the horse in there. Don't get too excited. In that there, it's being revised to, is it 2018. So from accounting period starting 1st of January 2018 or any later, IFRS 15 should be adopted. Okay. One tiny little picky point is that if you want to adopt the leases standard early, you're allowed to adopt standards early once they've been issued, that's fine. But if you want to adopt the leases standard early, you can only adopt that leases standard early if you have also gone through and adopted IFRS 15. You cannot adopt IFRS 16 until you've adopted IFRS 15. Okay, excellent. There you have it. In terms of the current issues exam question, I suppose that's the bit that you're all interested in. It's like, Chris, get on with it. You're taking up my time. But when early at the end, you can see the end in sight. There is light at the end of the tunnel, as they say. The current issues exam question, 3 bits to consider. First bit, you need to have knowledge of the current standard and its application. So you need to make sure that you're happy with all of the accounting standards that we've done, whether that's impairments, intangibles, deferred tax, leases under IS 17, agriculture, I don't know, any of them. You need to make sure that you're happy with it and that you can apply it, which you should be able to do with some dedication and hard work, because that's usually the easier bit of any question. Okay, it's like an extension of question 2 or question 3. Okay, and once you have that knowledge, it does help you then with the second bit, the updates of the current standard. Why are we developing a new accounting standard? Well, that goes back to what we did at the very start of this video, doesn't it? Can you remember the 3 reasons why we have new accounting standards? Why do we update our accounting standards? What was the first one? I can't hear you. Louder, please. Excellent. It was inappropriate in the current business climate. Maybe I'm going a bit deaf in this ear. What was the second one? Much better. You're on it. Yeah, the rules and the standard were not consistent with the framework definitions. And I'll use both ears for the final one. Yes, consistency there with US GAAP. Excellent. Well done. Yeah, that's a little bit harder because you need to use, it's like the framework. They are my principles that underpin any changes in accounting standards. So you can take any accounting standard and potentially try and apply any of those principles as to why things may need to be updated. A little bit more of a challenge, but a challenge that you are definitely up to. The third and the final bit, the hardest bit of all, is potentially the application of the new rules in the exposure draft or new IFRS. Now you think, no way, that's so cruel, that's so harsh, I have to use the new rules or the new exposure draft to be able to come to an answer. It's a lot easier than what you think, because the examiner isn't going to throw in any ridiculously complicated technical aspects within there. The examiner just wants to ensure that you understand the basics of the new accounting standard. Essentially, any numbers go. Okay, if you make an attempt at it, you will get some credit. And a lot of the information is given within the question in a more simplistic manner than what has been seen in any of the previous questions. So even though it's a very hard part of this question, it's still a bit easier than some parts of the exam that you may get. So what have we seen? That list there covers all of the past exam questions on current issues since June 2010. And what I like about it is we spoke about the leases project, we spoke about the revenue project and how long it's been. And because it's been so long, the questions have appeared twice within current issues. If you go back to June 2010, there was a question there on leasing, and December 2011, there was a question there on revenue. But if you go to December 15, there's now another question on revenue and another question on leases. But that's very rare that that goes through and happens. If something's tested, it won't get tested recently again. Okay, it'll be a while, a long time before it comes up again. And you're looking at those thinking, well, what's the point in doing those questions? If they've cropped up in the past, they're not going to crop up in the sitting that I'm going to do the exam. So why bother? Wrong. You need to bother. Why? There's two reasons. I think the first reason is that it gets you familiar with the style of question. Okay, so thinking about the current standard, thinking about the updates and application of any new rules. So it gets you thinking consistently, like you think consistently when it comes to the world of group accounts. But also as well, look at those accounting standards. Yeah, there's current issues surrounding them, but it tests you on IAS 17, IAS 19, IFRS 9, IAS 37, IFRS 13, IFRS 7, IFRS 8, IFRS 12. Oh, geez, it tests you on loads of accounting standards that are now relevant, not to question 4, but to either question 1, question 2, question 3. So it's additional practice on the accounting standards that you currently know and love so much. So it's twofold, isn't it? Practicing these questions gets you into a routine about how you can answer the questions and gets you familiar with the style. And secondly, it improves your knowledge on the most up-to-date accounting standards. If you're looking at those and thinking, which ones should I do? It's really simple. All of them. If you do all of them and do them properly, don't just read the question and go, and then look at the answer. Write out your own answer, review your own answer and compare it to the model answer. Get used to writing a proper, full-blown exam style answer, like what you would if you were in the exam hall. If you can do that, you're going to give yourself every possible chance of passing one of the easier questions within the exam. It's 25 marks. Half of 25 is 12 and a half. Half marks don't exist. 13 marks is what you need to be able to go through there and pass the current issues question. You can score many more than just the 13 marks if you put the time and the effort in. Take a weekend, a long weekend, if you've got any bank holidays, wherever it is that you're studying around the world, and dedicate that whole weekend. Say goodbye to your friends, say goodbye to your family, get yourself locked up into a room and work all those questions, because if you do, you'll be so happy come the real exam, because you'll be easily able to get the 13 marks. Don't ask me what's going to crop up within the current issues question. I think out of all those, I think I've guessed maybe one correctly, which I think was fair value way back in December 12. I've constantly tipped leases and revenue to crop up for the last 4, 5 or 6 sittings because it had to come up, and it's only obviously just cropped up. Other than that, anything can come up. If you've got a knowledge of the current accounting standards, if you've got our 3 principles as to why things are updated, you are going to do well within this question. If you do get stuck, please don't hesitate to get in touch with us on the forum. Other than that, that's the end. And now the hard work is over to you. Very best of luck. Work as hard as you have ever worked before, if not harder. And hopefully we'll see you on the other side with a nice, comfortable pass. Very best of luck.